So we talked about this at the end of last year. We talked about different things that people should do or could do or look at least in November and December, because that window of opportunity closes on December 31st. We talked about tax loss harvesting, which is the idea that if you had some losses through the year, then you can offset those for your taxes. Well, Ryan, we really didn't have a whole lot of losses last year. It was a pretty good year in the market. Were people doing any tax loss harvesting? Was that a part of the conversation? And if it wasn't, now what's a part of the conversation when you start to talk to people in the new year?
So, for most of our clients, taxes and tax planning is a continual part of the conversation. One of the things that makes us different is that we do actual tax preparation for all of our financial planning clients, which means, we're doing the federal tax returns, we're doing the Maryland state return, Pennsylvania, Delaware, Virginia. I think I do tax returns in like 30 separate states at this point, just from clients either moving there or having properties there, kind of from all over. So taxes is always a part of the conversations whenever we're meeting, because we're meeting once at tax time to physically do the tax return. And then we talk a little bit about it at that point. And then we meet again, normally May, June, early part of July, to kind of review what's happened in the year, review the tax situation, talk about our plan for this year. Then we meet again in October, November, sometimes in December, really kind of review what's happened for the year and finalize any tax aspects. So it's kind of always a part of it. This was a very good year in the stock market. To your point, there wasn't a lot of tax loss harvesting to be had, at least for a lot of the positions that we're managing directly for clients, right? Because the tax loss harvesting is part of the overall strategy that we're looking at throughout the year. But for some people that had certain stocks that lost a good bit of value, I think Oracle was one that took a fairly substantial hit. UPS is certainly down from its highs. FedEx is down from its highs. There's certainly individual stocks out there that, some clients want to have those conversations, but really for us, that end part of the year is more about the required minimum distributions, making sure we're taking out those distributions that the government says, hey, now that you've reached this magical age, which the new age right now is 73. It used to be 70 and a half, then it was 72. Now it's 73. You have to take X amount of dollars out and pay tax on it. That way the government can get their share of the money, because they let you put this money away for 30, 40, 50 years and not pay tax on it. So a lot of the conversations we're having is we're reviewing the accounts for the year. We're looking at all the various IRAs, 401ks that people might have, and making sure that we're taking out the appropriate amount. So that way they don't get penalized, because if you take out the wrong amount, you don't take out enough, they charge you a 25% penalty for not taking that amount out. And, why pay that penalty when, you could certainly just make sure you take it all out. We're looking at some clients like to be really, really charitable minded. And so instead of taking out those RMDs, they're donating that RMD amount to charity. And, last but certainly not least is Roth conversions, really making sure that we're doing, we've looked at all of their income throughout the year. We've looked at, if they're working, we looked at their pensions. We're looking at bank interest. We're looking at, capital gains and losses. We're looking at any distributions they might have otherwise taken out of their, retirement accounts, to figure out how much of a Roth conversion could be appropriate for them, and making sure we've taken the applicable taxes. And that is really what November and December is for our office, is that year end tax planning, to make sure that the plan we've been working on all year long through all out 2025 has been implemented and gets done before the end of the year. And, it is like Groundhog Day for us, basically January, now it starts that entire process over. We're going to sit down, we're going to review everything that we did. Hey, now that December is past, let's sit down and talk. Here's how the accounts performed. Everyone wants to know how you guys did for the year, your, year to date gain loss, that type of thing. But let's talk about the new year. Let's talk about 2026. Let's, are you going to retire this year? Do you think you're going to get a raise? How much money do we think we're going to take out this year? Looking at all those aspects. I was just sitting down with some newer clients of mine. They came to me as a referral. And last year was our very first year working together. So they wanted to kind of take that process slow. I started out by doing their taxes last year, and then they became clients. We kind of moved them through the planning process. And they'd been in this situation for a number of years to where they're working with their financial advisor and they're working with their financial advisor's tax person. They advertise that they takes care of taxes for them, but in reality they're farming it out to somebody else. And every single time they would ask their advisor, hey, we want to talk about Roth conversions, what should we do? The advisor's answer was, why have you talked to our tax person? And their answer was, you said you're our tax person. That's the reason we chose you. And like I said, they were using a third party. And so the conversation was, oh yeah, certainly we could do a Roth conversion. And it was always a round, even number. It was always 50,000 or 75,000 or 25, 100,000. It was always these increments of 25,000 for them. And I was sitting down prior to us, them becoming clients for the first year. I said, what's with this number? They said, we don't know. That's just, we ask about Roth conversions and he throws out a number and there's never really any consideration for everything else. And then they were complaining about the conversions they're doing are messing up their Medicare IRM. And I said, all right, let's just kind of take everything back, because you've been doing this plan. I'm using my air quotes here. You've been having this plan for the past couple of years with this advisor that you chose. And every single year, it really seems like you're just kind of throwing stuff at the wall to see what sticks. Every single year, the amount of money that you're owing is ranging so incredibly wildly that you're paying all these penalties because there really isn't this cohesive plan. And as I said, that they came to me around tax time last year in 2025, March or April, right around that time. And I did their taxes for them. And we did a little bit of planning for the end of the year based on what they had already kind of done. And now this is going to be their first year as clients for us for the entire year. And I brought them in and I said, hey, I want to have our tax plan in place. I want you guys to know here's what we are going to do this year and go forward. So let's sit down and have that discussion. I want to know, here's how much money you made last year. So bring me your W-2, bring me exactly your last pay stub. Let's base all of our projections off of that so we can get our baseline number. I know you're going to make right around $225,000 a year. I know here's exactly how much you're having in your withholding. I know about here's how much you have for state. I know here's how much we're going to be taking out from the IRAs because one of them is retired and one of them is working. I know here's how much you're getting in Social Security. Let's come up with a plan for Roth conversion so we know the very specific number that we're going to convert. Is it going to be $65,000? Is it going to be $72,152? Let's find out that number so we get that appropriate exact number, because we don't want to just throw a number out there at the wall. I want to know exactly what we're doing. That way we can make the right estimated payment. Last year, they paid over $5,000 in interest and penalties to the IRS because they owed too much money. This year, I want to make sure that we're paying in exactly what we need so that, number one, they're not having to stroke a big check come tax time in 2027 when we do 2026's taxes. And number two, they're not going to pay any penalties. And lastly, number three, I don't want them getting a massive, massive refund, which had happened in the past, which means that they're giving all that money to the government and they're getting it back from the government at the end of the year without interest. You're giving the government an interest-free loan for this entire year when you could have that money sitting in your bank account earning interest because, some high-yield bank accounts are earning 3-4%. And, the reaction that I received from them is, it's a heartwarming yet alarming reaction for me because, they were so very appreciative that I was sitting down with them and explaining the exact, here's why we're doing this amount for tax purposes, but here's why I chose this amount. as part of your overall plan for getting the money out of your IRA into this Roth account. So I'm showing you, here's how much money we're going to save in taxes by doing this. Thank you for showing us, here's exactly how much money we have to pay, and telling us exactly, basically laying everything out in an organized plan, because we've never experienced this before. And to me, it was alarming because they chose to work with an advisory team that was advertising and telling them, we do everything for you all in one place. And the fact of the matter was, that's not what was happening. They were going in to see their investment advisor, and he was talking to them about investments. If they had tax questions, he was saying, go talk to my tax guy. If they had estate planning questions, they were saying, go talk to my estate planning guy. None of that was actually being done in-house. And those three areas were not talking to each other. And this thought of, that's what I'm paying for, that's what I think I'm signing up for, and that's what they weren't getting, is ultimately what led them here to us, because they were talking to their friends who were clients of mine saying, hey, this is what we're experiencing. Is this normal? Is this what you're getting from your advisor? Because we hear you talking about, the things that you're doing with him. What is it like for you? And ultimately they became clients. And, now I hope we have them on, a path that they're happy with. But it all started because they asked their friends, this is what we're missing. We're missing that cohesive plan that brings everything together. And they picked up that phone and they called us at 866-597-1040, 866-597-1040. And, sit down with myself, Lawrence, Faisal, any one of my advisors here, and let us show you what true, cohesive, comprehensive planning can look like for you and your family. 866-597-1040, 866-597-1040. Or if you're like me, you hate picking up the phone, go to my website, thesavvyinvestorradio.com. Right at the top of the page, schedule my call. Click on that, put you right to a calendar without having to pick up the phone, thesavvyinvestorradio.com.
It's weird that when you get into retirement, you're using all these government programs, and you got all these new government rules that you got to deal with. Social Security, never used that before. Medicare, never used that before. RMDs, oh my gosh, what's that? There's a time when the government tells you have to take a certain amount of money out of your 401k. So this idea of making money and taking it from your 401k and moving it over to the Roth and paying the taxes along the way, not only does that help your kids and your grandkids after, with estate planning issues, but it also can help you. If you want to buy a car when you're in your 70s, you don't have to take $50,000 out of your 401k to get 35. You can take 35 if you've detaxed all your money. That's why we talk about these things here on the show. Give Ryan and the team at Prostatis a call. Use our website. Let's have that conversation about your retirement. And absolutely, let's have this conversation about taxes. We are forced into this conversation, really, with 401ks and IRAs and all that we have to deal with now with retirement planning. 866-597-1040. 866-597-1040 is the number, or use the website, which is thesavvyinvestorradio.com. Thesavvyinvestorradio.com. There you'll see a button that says tax analysis button. Click on that. You'll be on your way.